There's $100 million in revenue on the line for EV maker Rivian. According to the Wall Street Journal, the company could face a massive hit to its top line because the U.S. has relaxed its fuel economy rules. My next guest says both the IRA credit expiration and lower emissions regulations will be major headwinds for EV penetration in the fourth quarter, just as the global growth picture starts to trend upward. Let's bring in Dan Levy, senior autos analyst at Barclays, and it's great to see you today. So globally, you're saying people are buying EV cars at a faster clip.
Yeah, thank you, Contessa, for having me. Yes, that's right. We are seeing EV penetration trending up for the year. Globally, it's roughly 23, 24%. This is up, call it 2 points year over year, sort of where we are year to date. But it's in many ways a continuation of a different story in each region. China is clearly leading the way. Roughly half the sales in China are EVs today. Europe is seeing an uptick. They're roughly low 20s. That's up a few points year over year, and that's on stricter regulations. But the U.S. is really sort of stuck in this roughly high single digits, low double digit penetration, and we could see some risk to those numbers after the fall off or after the expiration of the EV tax credit, and especially once you see some of these emission regulations coming off.
I mean, your word for it is pretty attention-getting when you call it an EV winter in the United States. First of all, on the tax credit and the expiration that comes due at the end of the next quarter, I mean, everybody knows it's coming, but do you expect that there's going to be, at least temporarily, more sales of EVs because it's ending and people maybe, the fear of missing out, they are worried about not getting the tax break if they're considering an EV?
Yeah, that's right. There is going to be a pre-buy. That's naturally what you see when you see an outgoing subsidy, is that automakers tend to try to take advantage of those, and they'll advertise that pretty heavily. So a company like Tesla or Rivian, for instance, they will push volume likely this quarter to take advantage of that outgoing credit before it's gone.
Okay, and then there's this issue of the Trump administration going through and saying, we're going to lower the emissions regulations or the requirements. So, one, what does that do for Tesla and Rivian and others? And what does it do for the traditional car manufacturers, Ford and GM?
Yeah, that's a great question. Look, for Tesla and Rivian, the impact is on regulatory credit sales. Regulatory credit sales are a pretty important piece of the profit picture for both of them. For Rivian, that's really how they were able to get to. They had a few quarters of gross profit positive results. They used regulatory credit sales. And so there's obviously risk on those numbers. They talked about that on the second quarter call. Same for Tesla. Listen, Tesla last year did, in excess of $2.5 billion of regulatory credit sales. It's a meaningful portion of their profit. And they talked on this call about a weaker regulatory credit sales environment because of some of the changes in regulations. On the flip side, for companies like Ford or GM, when you take away the EV tax credit, so less incentive for consumers to buy, you take away some of the regulations that are sort of forcing the automakers to sell EVs for compliance requirements, and it probably tells you that in the near term and potentially even in the midterm, EV mix is going to come down because they are losing a material amount. I mean, Ford is losing $5 billion plus on this year. GM is probably in the same ballpark. And when you take away some of those regulations, it incentivizes them to change their product mix.